Hey, so New York Thursday morning or AM recap. Took a few trades. Went in around 8:30, being bullish. Price action had been going higher for most of the overnight session. So just initially went in with the idea of being bullish. There was every chance that price maybe wanted to keep on repricing down. But essentially I didn't see that yet. Not yet did I see any kind of reprice. So once we came into the 8:30 news data print, I kind of saw probability for price to kind of go higher here. Kind of, even though we took some sort of relative equal highs up here, these two minor highs, we delivered them for our fair value gap. We had a good strong 5-minute change in standing delivery, so I was kind of expecting this thing to keep on running higher. It led to the first session of the day, which was a long 30-second long. I was bullish. I was bullish. I saw this 30-second CISD that formed around here. Took this for an entry, targeting these two relative equal highs that we had up here. It was kind of a model inside of a model. Took the entry, eventually got stopped out, break even. Price almost took one of those two highs, didn't quite take it. That was the first session of the day. Break even start to start with. Had a few other attempts trying to go long here. I was had some really shit trading ideas. I saw these relative equal highs form up here, triple equal highs, and I was like, triple relative equal highs, and I was very bullish at this point. I was just thinking that price was just going to go higher, higher, higher. We eventually get to the point where we start repricing down. There's a strong expansion down and into the session. Session pretty much opens, and we have this massive dump. I get to the point where I was more bearish. And I was expecting lower prices. To the point where it was the bearish, the bias had changed lower. The other thing too, which I like to hunt, was the equilibrium of the range, which was 2600. So I essentially wanted price to see price hunt that low, hunt the equilibrium of the range. Funny that I say that, because the next setup I took was on the 15-second. It was a long setup. So as price sold off quite strongly here, what we did do is we kind of generated buy-side liquidity up here, and we got really close to equilibrium. We only got a few points off. I didn't take any shorts here. Essentially I was kind of bearish at this point, but I didn't see anything that was kind of really good here for a short. Maybe there was a short around the 30-second here, and you could have targeted some near the equilibrium of the range, but never quite took it. But what I did see this market structure shift on the 30-second. Eventually price starts trending up. We have these highs here that are obvious to aim for, back into maybe 15-minute fair value, 15-minute fair value gap, and essentially I took this 15-second long here. Essentially price forms high here. Essentially price breaks it on strong volume. So 15-second CISD here. It was a very small setup. Essentially I was targeting maybe 20 points, 25 points off that. And the stop was below there. So you had maybe a good 1 to 1.5 RR trade. That there was a good trade and it was successful, even though it was against the bias. At that point, it was just made sense. In that moment there, I just read price action, and setup worked. Late in the day, I essentially kind of turned off the computer there. I took quite a few trades. There was a few other shitty ideas that I took up here, which I didn't like. It wasn't the greatest move, so I kind of just chose to close up shop for the day. Would have liked to look for a short later after 10 a.m. if I was looking for a short, I would have waited for price to hit that area, and I probably would have waited for some sort of change in stand delivery, and then waited for another order block or inverse fair value gap to form to the downside. Eventually does happen around here, 56, and price does take this low down here. But yeah, that's what I took.